This is Nightly Business Report with Tyler Matheson and Sue Herrera.
The clouds lift. Microsoft's cloud business shows growth, offsetting a weak PC market and helping to prop up revenue for the quarter and its stock after hours.
We're bringing it from 1% up to 4%, and I actually think we can go higher than 4%.
Trump wants the economy to return to the good old days of 4% growth. Why has it been so hard to achieve? Hot topic, the presidential candidates are not the only ones who don't like the Pacific Rim trade deal. China doesn't either. Those stories and more tonight on Nightly Business Report for Thursday, October 20th. Good evening, everyone, and welcome. I'm Sue Herrera. Tyler Matheson is on assignment tonight. We begin with a surprise from Microsoft. The world's largest software company reported earnings that were much stronger than expected. And a large part of that is due to gains in its cloud computing unit, which helps businesses store and access their data over the internet. Microsoft earned 76 cents per share, blowing past projections of 68 cents a share. Revenue grew 3% from last year to more than $22 billion. And investors liked what they saw, sending shares initially to an all-time high in after-hours trading. Josh Lipton has the one key takeaway on Microsoft's quarter.
$6.4 billion. That was a big number in Microsoft's report, and it refers to the company's revenue in its so-called intelligent cloud division, and that result was better than the street expected. Within that division, all eyes were on Azure. Remember, that's Microsoft's cloud platform, which competes with Amazon's cloud business. And there, RBC's Ross McMillan points out that Azure revenue grew 121%. McMillan saying that cloud growth is better than the street anticipated, and the profitability of that business, he notes, is improving faster than expected, and that's all good news for Microsoft bulls. For Nightly Business Report, I'm Josh Lipton, San Francisco.
Timothy Lesko joins us now to talk more about Microsoft's better-than-expected results. He is Principal Portfolio Manager at Granite Investment Advisors, and he owns the stock. Welcome, Timothy. Nice to have you here.
Well, thanks for having me.
The street obviously missed it with this one, and it frequently happens that way. You own the stock. Tell me what you saw in terms of highlights in the report. Josh mentioned the cloud computing, but what else did you see in that report that you liked?
Well, I think Josh kind of hit the nail on the head with it. Is we somewhat knew that PC sales were going to be light. That's been about 40 to 45% of Microsoft's business for a while. And by blowing out on the intelligent cloud portion of their business, they really showed the street that they have a growth engine again, which they really haven't had for years. And it's hard for big old companies to change from being pretty much a stodgy operating system company and Windows tools company really into a competitive and growing cloud player. So it's really nice to see them do that. And that puts the intelligent cloud portion of their business above 30% of revenue and makes people really pay more attention.
Can they continue to grow it, do you think?
Well, I think you're seeing more and more businesses move into cloud, and more specifically move into private clouds and intelligent clouds. And as there's plenty of commoditized cloud business out there, the real stuff where that they can bring some, call it intellectual capital to the table that only they have, makes it obviously a more profitable business. You saw margins of that business go from the low 40s to the high 40s. So there's really nothing better for a business when you can have better margins in a growing business.
What about the LinkedIn acquisition? Did we get any more clarity on when that exactly will close and what it's going to mean to the company?
Well, the conference call started about 2 minutes ago, so I don't think we've gotten any more clarity so far, and I think it will be an interesting one because it's really on the heels of their Skype acquisition, wondering if they're going to take these other internet-based technologies and apply them somehow to help grow the other businesses. Otherwise, they can be a distraction or an asset that they write off like they had to do with the Nokia acquisition. So I guess we are guardedly optimistic that they can add LinkedIn into the suite of business products that they offer. But so far, I don't think anybody knows really what that path is.
All right. Timothy Lesko. Thank you, Timothy. Timothy is with Granite Investment Advisors. Two other Dow components reported earnings, Verizon and Travelers. Verizon saw revenue fall along with the number of subscribers. The company added far fewer wireless customers in the third quarter than expected. Part of the reason is heightened competition among all of the carriers. Meantime, the company says it's assessing whether it will need to renegotiate its acquisition of Yahoo after that company disclosed a major data breach. As for Travelers, the property and casualty insurer reported a 23% fall in profit as gains from underwriting declined. Travelers and Verizon were the two worst performing stocks in the Dow today. And that decline in the shares of Verizon and Travelers weighed on the broader market today. Not even a 9% gain in American Express was enough to lift the blue chip index. American Express reported a strong quarter, which we told you about last night. So today, the Dow Jones Industrial Average lost 40 points to 18,162. The Nasdaq dropped 4.5, and the S&P 500 was off nearly 3. Sales of existing homes rebounded in September despite a persistent shortage of properties to choose from. The National Association of Realtors says that sales rose more than 3% to its highest level since June. The report also showed that first-time home buyers accounted for 34% of September's sales, matching the highest level in more than 4 years. Separately, Freddie Mac reports that mortgage rates have hit their highest level in 4 months. And the number of Americans filing for unemployment benefits rose more than expected last week. The Labor Department reports initial claims for unemployment benefits increased 13,000 to a seasonally adjusted 260,000. Part of the reason of the increase in claims could be related to the effects of Hurricane Matthew, which left some people temporarily out of work. Claims for North Carolina in particular increased by more than 2,500 last week. And the economy was a big focus of the debate last night, from the national debt to taxes to economic growth. Steve Leisman takes a look at what both candidates said and where they stand on the issues important to your money.
An economic forecast is neither fact nor fiction. It's just more or less possible. We'll get to Donald Trump's big, interesting, and debatable claim that his plan can achieve 4% growth in a second. But first, here's a debatable point from Hillary Clinton.
I also will not add a penny to the debt. I have costed out what I'm going to do. He will, through his massive tax cuts, add $20 trillion to the debt.
Clinton's tax and spending plans, according to the Committee for a Responsible Federal Budget, would add $200 billion to the budget over 10 years. Now, by contrast, Trump's plan would add more than $6 trillion. Clinton tries to pay for his spending by raising taxes, and Trump pays for his tax cuts by cutting spending and through what he believes will be strong growth.
I'm going to create tremendous jobs. And we're bringing GDP from really 1%, which is what it is now. And if she got in, it'll be less than 0. But we're bringing it from 1% up to 4%. And I actually think we can go higher than 4%. I think you can go to 5 or 6%.
The 4% number has raised a lot of skepticism. 2000 was the last year we grew that much. And only from 1997 to 2000 did we have a long sustained period of 4% growth. 15 is the number of years of the past 50 that we're at or above 4%. But 20 would be a more realistic number, is the number of years that we're at or above 3.5%. Growth is ultimately determined by two things: hours worked, or growth of the working age population, and productivity, or how efficient those workers are. Now, population has been trending down since '92, and productivity has been mostly trending down since 2002. That means the components of growth have mostly been trending down, leading to expectations of slower growth. But most economists agree lower taxes can help growth, but they warn the positive effects can be outweighed if Donald Trump runs up the deficit. For Nightly Business Report, I'm Steve Leisman.
Craig Dismuke joins us now to discuss the issues that he says are preventing the U.S. economy from reaching that 4% growth rate. He is chief economist at Vining Sparks. Nice to have you back, Craig. Welcome.
Hey, good evening, Sue.
Let's put the politics aside and focus on the economics. And you say that there are 3 reasons that we have not been able to get back to that 4% level. They are structural, they are policy, and there's the global malaise to deal with. Let's start with structural problems. What are the biggest issues?
Well, the biggest issue structurally is that we have an aging population. And this is something that monetary policy doesn't address, fiscal policies don't address. When you have an aging population, then you tend to see economic growth slow down. We've seen this play out in Japan, it's playing out in Europe to a degree, and it's playing out in the U.S. Now, our problem isn't as big as Japan's, but as you have an aging population, remember that when people get over 65, you have a declining labor force, as Steve referenced. Secondly, they spend differently, so they don't spend as much. They save more. And then third, they borrow less, and there's less leverage in the system, and so you have weaker growth. So that's the biggest structural challenge. And monetary policy, fiscal policy, neither of those things can address that.
Policy obstacles, let's move to that. You say the regulatory environment is holding back growth.
Absolutely. Almost every industry that we talk to, business leaders talk about the regulatory environment, whether it's environmental policies or Dodd-Frank. Every sector has some type of regulatory policy obstacle that they're dealing with today. And so it's really hurting business confidence. And when you look at business confidence today, while it's rebounded from the recession, it's still at a level that is consistent with previous recessions. So the business outlook isn't very bright right now, number one for sales, but also because of the regulatory burden that they're dealing with and and all of those things, it hurts productivity because they have to hire more and more workers to deal with the regulations rather than actually producing goods and services.
Now we go to global malaise. I kind of know what that is, but you're talking about the downturn in many economies around the globe.
Right, and we don't have to have growth be too fast globally for the U.S. to grow. Certainly, we could be the engine of growth for globally. But it's nice when you have Europe and you have Japan and other developed nations growing alongside you. It just helps with U.S. growth. Today, we don't have that, and so it's not a prerequisite to have faster U.S. growth, but it certainly helps. Today, we don't. The European economy is growing very slowly. The Japanese economy is stagnant still. And so they're not the tailwind that they could be.
All right. On that note, Craig, we'll leave it there. Thanks for joining us. Craig Dismuke with Vining Sparks. Still ahead, what the leaked emails reveal about the Clinton camp's relationship with the biggest firms in Silicon Valley. One of the most controversial topics of this presidential election is trade, and more specifically, the Trans-Pacific Partnership, or the TPP. It is a sweeping 12-nation Pacific Rim trade deal championed by President Obama. But both Hillary Clinton and Donald Trump oppose it, and so does China. Eunice Yoon has more from Beijing.
Trade is a touchy subject in the presidential election. Any proposal that even suggests that Americans could lose jobs is heavily criticized. The TPP, or Trans-Pacific Partnership, is one such proposal. The trade deal is part of President Obama's pivot to Asia, his efforts to strengthen America's role in the Asia-Pacific region. Both presidential candidates have rejected it, and they're in unusual company. China is wary too. China is not one of the 12 countries that has signed on to the TPP, and it stands to lose out. The TPP isn't a classic trade deal like NAFTA. It's not so much about tariffs, but standards of corporate behavior on workers' rights, environmental protection, and how much a government can grant a company financial support. The proponents of the TPP say it'll help level the playing field for companies operating in Asia, including American ones. That would likely pressure China to adhere to these newly defined U.S. standards. The TPP is meant to help tie the region's economies to Washington. American workers fear the preferential treatment under the TPP for countries such as Vietnam would hurt U.S. factories. In fact, the deal would likely threaten China's manufacturing might. China is already losing factories to cheaper nations like Vietnam, and the TPP would only give international companies extra incentives to move their production away from here. China has expressed concern about the U.S.'s presence in Asia, and in fact, Beijing has drawn up plans to create its own Asia-wide free trade pact. U.S. allies like Japan have expended great political capital to sign on to the American deal. And the danger for Washington now is if the TPP isn't delivered, the U.S.'s credibility in Asia as well as the emerging world could be damaged. And that would only bolster China's political standing in the region. The TPP could still be ratified in the lame duck session of Congress after the November election, and Asia will be watching. For Nightly Business Report, I'm Eunice Yoon in Beijing.
The stolen Hillary Clinton emails obtained and released by WikiLeaks reveal new details about her position on encryption, which, as we've been reporting, is a divisive issue between Silicon Valley and law enforcement. And it pits privacy interests against national security. Eamon Javers has been looking into the story for us. Good evening, Eamon.
Yeah, hi, Sue. This is a relationship that came under intense scrutiny last year, and now newly released Clinton insider emails show just how cozy the Clinton camp was with some executives at the world's two biggest companies. With less than 20 days left until the presidential election, newly leaked emails putting the Clinton campaign on the defensive, focusing on Clinton's stance on the issue of encryption. She spoke about it just days after the San Bernardino attacks during a primary debate on ABC.
Maybe the back door is the wrong door, and I understand what Apple and others are saying about that. But I also understand when a law enforcement official charged with the responsibility of preventing attacks, to go back to our early questions. How do we prevent attacks?
Clinton campaign staffer Sarah Salo told other campaign aides she had circulated Clinton's comments about encryption to a contact at Apple. Her email reads, "From my contact Nick at Apple. Looks good. Just heard that Google is good too." The Apple insider, believed to be Nick Ammon, the company's director of global government operations, writes, "Hi, Sarah. Yes, this was great. I got the clip to Tim last night. Definitely struck the right tone." The emails seem to suggest that the Clinton camp was seeking approval and validation from the company about her message on encryption. Apple had no comment. Neither the Clinton campaign nor Google responded to requests for comment. Apple's dispute with the FBI became a public battle in early 2016 when a judge ordered Apple to help the FBI unlock the San Bernardino shooter's phone. Now, Sue, the leaked emails, which Clinton's campaign have never confirmed are legitimate, also show that Congresswoman Zoe Lofgren sought to keep Clinton from siding with the FBI on the encryption issue. Writing to Clinton's top advisor, John Podesta, quote, "I hope that our candidate does not leap on the side of the FBI on the encryption ruling. If she's leaning that way, can I talk to her?" Podesta responded that Clinton was inclined to stay out of it altogether, Sue. So a lot of insider back and forth over
Absolutely.
Apple and encryption.
So what might this tell us about Apple's possible influence in Washington if there is a Clinton administration?
Well, it's hard to say, but clearly from the tone and tenor of the emails there, Sue, you get the sense that the Clinton campaign was looking to sort of run Hillary Clinton's public statements by executives at Apple in order to see whether they got buy-in from those executives at Apple over what she was saying. That indicates to me, anyway, that Apple will have a lot of influence if there's a Clinton administration here in Washington next year, at least sort of a friendly relationship between the two sides, with the Clinton administration realizing in many ways politically it needs Apple and it needs Silicon Valley.
Eamon Javers in Washington. Eamon, thanks, as always.
You bet.
And to read more about the emails released by WikiLeaks and the Clinton encryption position, you can head to our website, which, as you know, is nbr.com. Falling demand hurts results at Union Pacific, and that's where we begin tonight's market focus. The railroad operator said a drop in freight volume for coal and other commodities caused profit and sales to fall. The company also warned results for the current quarter will continue to slip as currency headwinds and weak demand for consumer goods remain a challenge. Shares fell more than 6.5% to $90.64. American Airlines warned a rise in employee wages will hurt that company's profit margins this quarter. The nation's largest airline also posted a drop in profit and sales, but still beat expectations. CEO Doug Parker, though, sees a silver lining.
We were happy with today's results. We're seeing revenues, well, they're down year over year, as all airlines are. They're down less for us than for others, and they're down less than they've been in other quarters. So we're starting to see a rebound in the revenue environment.
Shares were down 4 cents to $40.59. Walgreens Boot Alliance reported a higher than expected quarterly profit, even though sales were shy of estimates. The pharmacy operator said it expects its $9 billion acquisition of Rite Aid to close 3 months later than planned amid delays in selling some stores. Shares rose nearly 5% to 81.02. New home orders lifted results at Pulte Group, but the company said an increase in land and labor costs would cause gross margins to be lower than previously announced. Pulte Group shares were off 3% to $19.20. And AT&T and Time Warner have reportedly entered into talks that could result in a potential tie-up between the two industry giants. Bloomberg says the talks are informal and focused on building relations instead of laying out terms of a specific transaction. AT&T ended the day down almost 2% to $38.65. Time Warner shares were up more than 4% to $82.99. And online payments operator PayPal saw revenue rise as an uptick in customer additions and transactions helped results top estimates. Profit also increased, and the company raised the lower end of its full-year sales guidance. Shares rose initially in after-hours trading, but ended the regular session down 15 cents to $40.09. Coming up, words of wisdom, business advice from some of the country's fastest-growing private companies. Biotech firm Alkermes reported positive data on its leading depression treatment. The drug trial significantly reduced symptoms of depression in patients suffering from major depressive disorder. That's compared with a placebo. That sent shares spiking by more than 40% in after-hours trading. Shares of Ariad Pharmaceuticals also on the move after two top Democratic lawmakers demanded pricing information on its leukemia drug. Senator Bernie Sanders and Congressman Elijah Cummings sent Ariad a letter today asking it to explain why it raised the cost of the drug 4 times this year to almost $200,000 annually. You can see the drop-off in the stock midday when that letter was released. They are the fastest-growing private companies in America. Many of them are gathered at Inc. magazine's 5,000 conference, which just released its annual list. Their growth rates are something many only dream of, and tonight they're sharing some of their best business advice. Kate Rogers reports from San Antonio.
In 2008, stay-at-home mom Stacy Brown all of a sudden found herself a single mom, trying to figure out how to support her 3 kids. She was obsessed with chicken salad and started a quest in her own kitchen to perfect a recipe. Brown began selling her chicken salad door to door and saw her little business take off.
Phone was ringing off the hook, and then one day the health department called, and they let me know that it was illegal to sell anything that you have cooked in your home. And I had to make the decision whether I was going to go in a different direction or take the leap of faith and open a restaurant that only served chicken salad.
She took the plunge, opening up her first Chicken Salad Chick restaurant in Auburn, Alabama. From there, she quickly grew into 3 locations, and requests for franchises began to pour in. Today, Brown has 62 locations across 8 states, selling her 15 different styles of chicken salad fresh daily. The company has grown at an eye-popping rate, with more than $90 million in sales to date restaurant-wide since 2014, and a 3-year growth rate of more than 6,000%, landing at number 37 on the Inc. magazine Inc. 5000 list of the fastest-growing companies in America. Somerville, Massachusetts-based Paint Night is growing even faster, placing second on this year's list. The company's online platform arranges parties at local bars where attendees learn to paint a piece of art over the course of an evening. It's grown more than 36,000% in the past 3 years, with $55 million in revenue in 2015. The company has hosted 4 million customers in thousands of cities across the globe.
Week 3, we had We had posted a lot of events and we sold 350 tickets in like 11 hours, and we realized that this wasn't just going to be sort of an occasional once a month thing, that this was going to be something we could host every single day in Boston. And then when we expanded to New York City and saw the same success, we knew we were onto something, and basically we were just trying to scale as quickly as possible.
The leaders of both startups attribute their success to embracing challenges and not waiting for perfection before trying new things.
Perfect is the enemy of good enough, and to scale as rapidly as we did, I think it was a wise choice instead of trying to make sure everything was exactly perfect and not launching until.
Do not be scared of change, depend on it. So when things are good, don't take them for granted, because things will change. And when things are bad, don't dwell on that, because things will change. And it helps me keep everything in perspective.
Overall, Inc. 5000 companies have grown at an average of 490% over the past 3 years, creating 640,000 jobs, proving that small businesses really are the backbone of the American economy. For Nightly Business Report, I'm Kate Rogers in San Antonio, Texas.
And finally tonight, Snoopy is joining the ranks of the unemployed. After appearing for more than 30 years in print ads and TV commercials for MetLife, the insurance company is retiring the popular character. MetLife started using Snoopy back in 1985 to make the company seem more friendly and approachable. Snoopy will be replaced by a big letter M in blue and green colors. The decision comes as MetLife gets ready to spin off most of its U.S. life insurance business. Good grief, Charlie Brown. That does it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening. We'll see you tomorrow.